So today we're diving into Chijet Motor Company, that's ticker CJEJET, and honestly, its technical chart is a real head-scratcher. It is flashing some of the most contradictory signals I've seen in a while, putting this short-term bullish hope right up against a really grim long-term reality. Let's break down this bull versus bear battle. It all kicks off with this, a single, absolutely eye-popping number. We're talking a nearly 28% jump in one day. Now, a move like that, that's going to get everyone's attention, for sure. But the big question we have to ask is, what does it actually mean? Is this a genuine sign of life, or is it just a blip on the radar in a much, much bigger story? All right, so here's how we're going to tackle this. We'll start with that shocking rally itself, then we're going to lay out the case for the bulls, and then for the bears. After that, we'll weigh all the evidence, see which side is making a stronger argument, and finally, we'll get into what this all means for potential trading strategies. Yeah, that 28% jump, it was anything but quiet. It just exploded on massive volume. We're talking nearly 90 million shares traded, which completely dwarfs the average of just 13 million. When you see a price surge backed by that much volume, it signals some really intense interest. But what in the world is driving it? Okay, first things first, let's put on our optimist hats for a minute. Let's look for signs that this could actually be the start of a real turnaround. You know, despite the stock's pretty rough history, there are a few technical indicators that are flashing green, and they suggest this rally might just have some legs. So to really get the bull case, you gotta understand moving averages. Think of them like this. They just smooth out all the noisy price data over a certain period, like 5 days or 200 days. And what they show us is the underlying trend and whether the current price is looking strong or weak compared to it. And this right here, this is our first piece of bullish evidence. The current price has actually punched above its immediate short-term moving averages. The key thing to take away from this is that in the very near term, the momentum has shifted positive. Now, it's a small victory, for sure, but hey, it's a start. Next up, we've got the MACD. This is a huge momentum indicator. Basically, it's a tool that tells traders when momentum is picking up steam or when it's starting to fade. And when that MACD line turns positive, well, that's generally seen as a pretty bullish signal. And wouldn't you know it, for CJET, the MACD has just turned positive, which you can see with that little 0.032 histogram. And on top of that, the RSI, that's the relative strength index, it's hovering just above what we call oversold territory. So you've got this combination that suggests momentum is turning positive, just as the stock is maybe, just maybe, bouncing off a bottom. Okay, so there's a flicker of hope for the bulls, I'll give them that. But now we have to flip the coin and look at the other side. And this, my friends, is where the picture gets much, much darker. See, this one-day rally is fighting against the backdrop of an absolutely overwhelming, powerful downtrend. Now, what's absolutely staggering about this slide is the sheer scale of the problem. Yeah, the price is above the little 5-day average, but it's drastically below, well, everything else. Just look at that 200-day moving average. It's sitting at $1.51, while the stock is trading around 11 cents. The stock is literally trading at just 0.2% of its 52-week high. I mean, that is just a brutal, brutal downtrend. And it's not just the moving averages, not by a long shot. You've got a whole suite of other technical tools that are just screaming bearish. An indicator that measures trend strength, it's saying this downtrend is powerful and it's here to stay. Others that track the direction of price moves, they all point to the same conclusion. The path of least resistance is down. And the warning signs, they just keep piling up. Despite that one big day of volume, several other indicators that actually track where the money is going suggest that over the longer term, way more money is flowing out of the stock than in. That's a classic sign of selling pressure. You add in the extreme volatility and wow, the bear case is looking pretty formidable. So what are we left with? Two completely different stories. You have this short-term, high-volume spike that on the surface looks kind of bullish. And then you have it set against a powerful, long-term downtrend that looks incredibly bearish. So how do we make sense of this? This slide just lays out the conflict perfectly, doesn't it? Over on the left, you've got your bull case, a huge daily gain, tons of volume, and some short-term momentum indicators turning up. Then on the right, you have the bear case, a stock that's just been crushed by its long-term trend with negative momentum and money flowing out. It is a textbook clash of signals. And look, this isn't just our take on it. This is grounded directly in the source report. The summary right here points out this exact tension. It identifies those short-term bullish signals, but immediately contrasts them with that overwhelming long-term bearish trend. This quote from the report's interpretation really says it all. The strong underlying trend, it suggests the decline is going to continue. But those short-term signals mean you just can't ignore the possibility of a bounce. And that right there is the core dilemma for anyone looking at this stock right now. Okay, so knowing all of this, how in the world does someone approach CJAT? Let's try to translate this analysis into some potential trading strategies based on which of these conflicting forces might end up winning out. Let's just frame this with a direct question. With all of this conflicting data on the table, what are the key levels and scenarios that a trader would actually be watching? What's the game plan? For the bulls, the strategy is pretty clear. The line in the sand is that support level at about 9 cents. If, and this is a big if, the price can stay above that level, and if that buying volume continues, well then the rally could have enough fuel to go test the next resistance level, up around 13 cents. Now, for the bears, the trigger is the exact same level. If the price breaks below that 9-cent support, that's a really strong signal that the rally has failed and the big dominant downtrend is taking over again. In that scenario, the next logical target would be that lower support level, down around 7.5 cents. And look, regardless of which side you're on, the risks here are major. The stock is extremely volatile, which means prices can swing like crazy. Multiple indicators are now suggesting the stock is overbought, which is a sign that this one-day spike might have already exhausted the buyers. And that underlying selling pressure we talked about, it's still looming. Which leaves us with the ultimate question, doesn't it? Is this sudden burst of life a calculated risk for people who are betting on a bounce? Or is it a classic bull trap? Something designed to lure in hopeful buyers right before that long-term downtrend reasserts control. The technicals have laid out the battlefield. Now it's up to the market to decide the winner.